Welcome to the February Spotlight on Insurance and Property Casualty Coverage, brought to you by ProducersWeb.com. I'm Paul Wilson, and in this broadcast we'll cover some of this topic's biggest trends and most insightful research. This Spotlight on Insurance and P&C is sponsored by Gradient Insurance Brokerage, helping you remain ahead of the competition. For more information, please visit gradientib.com. The recent catastrophic earthquake in Haiti serves as a reminder that the United States is vulnerable to the same type of event and is currently underinsured, according to the Insurance Information Institute. The Institute recently noted that the potential cost of earthquakes to the U.S. has been rising due to urban development in areas susceptible to seismic activity. In addition, many older buildings were not built to current building codes or have not been upgraded. Meanwhile, the majority of homeowners living in earthquake areas do not have earthquake insurance. For example, just 12% of homeowners in California currently have earthquake coverage. California remains the U.S. state most at risk of a major earthquake, with a large earthquake likely to occur in Southern California within the next 30 years, according to a study by the 2008 U.S. Geological Survey, Southern California Earthquake Center, and California Geological Survey. Insurance executives polled at a recent industry conference predict that 2010 will be a year with continued losses and little growth. According to a survey of attendees at the annual P&C Insurance Joint Industry Forum, 51% believe overall industry premium volume will remain flat this year, while 36% believe premium volume will diminish. Meanwhile, just 14% anticipate growth in premiums written in 2010. In addition, 79% of respondents said they believe insurer combined ratios will rise this year, while 51% expect an improvement in profitability in auto insurance, and 37% believe the same about homeowners coverage. Finally, just 23% expect improved profitability in commercial lines, and 16% expect gains ahead in workers' compensation. Drivers who send text messages are 6 times more likely to crash, according to a new study by researchers at the University of Utah. Using a driving simulator, drivers in the study tended to decrease their minimum following distance when texting and also showed delayed reaction times. In fact, their median reaction times increased by 30% when they were texting and 9% when they talked on the phone. Drivers who texted also showed impairment in forward and lateral control. According to the researchers, texting, quote, requires drivers to switch their attention from one task to the other. When such attention switching occurs as drivers compose, read, or receive a text, their overall reaction times are substantially slower than when they're engaged in a phone conversation, unquote. I'm Paul Wilson, and thanks for watching the Spotlight on Insurance P&C. To see more video spotlights on your favorite products and practices, find them on ProducersWeb.com and browse by topic.